Good morning, everyone. I do apologize for a small delay due to some technical problems. Welcome to Windsor Brokers live daily market outlook for Friday, 19th of October 2012. We are at the end of the week. The highlight, of course, is the Eurozone summit that basically did not give a big impact to the single currency, as it's still in the consolidative mode of 130, 138 recent peak, unable to regain at first attempt 131.70 barrier, with the European Union leaders taking some steps towards establishing a single banking supervisor for the Eurozone. That was one of the aims of the meeting, and agreeing it would enter into force next year, opening the way for the bloc's rescue fund to inject capital directly into ailing banks. The European Council President said that 27 leaders agreed at a meeting in Brussels to adopt a legal framework by the end of this year, giving the European Central Bank overall responsibility for banking supervision. Once it's agreed, the single supervisory mechanism could probably be effectively operational in the course of 2012. That was announced on the press conference after near 10 hours talking in the yesterday's first day of Eurozone summit. French and EU officials said that all 6,000 banks in the single currency area would gradually come under the supervision of under supervision by approximately 2014, and it will start with banks receiving state aid, then larger cross-border institutions. Most day-to-day oversight would be delegated to national bodies. As said, creating an effective banking union, for which this deal was the first step, is regarded by the International Monetary Fund and the market economists as a key component in the overcoming the Eurozone three-year-old debt crisis. Among the comments, French President François Hollande said the leaders did not discuss possible financial assistance for Spain, but he laid out a series of steps that could turn a corner in the crisis. The second day of the meeting is today, and most likely they are going to finalize the current steps that they are agreeing to take in order to find a way out of the crisis. As said, risk aversion is now underway in the most of the instruments, with the yesterday's sharp fall of sterling being basically the top loser of the day, dipping from area of 161.50 down to approximately 160.40, directly threatening supports at 160.20 and 160.00, with the quite negative outlook. And of course, one of the top performers on the positive side was dollar yen, that broke finally above 79 barrier and cracked the resistance zone at 79.2139, which is the previous high and the 200 days moving average, looking for a possible extension higher and a possible test of another psychological barrier at 80.00. Dollar Swiss holds steady as its near-term recovery briefly breaks above initial barrier at 92.50, but it seems at the beginning of European session the more pressure comes on the dollar, as is evident move lower on the dollar index as well as dollar Swiss. Crude oil remains quite steady and holds in the narrow range around the 92 level, still unable to clear the upside barriers above 93, with downside so far being protected. More sideways movements, more consolidation, seen as a lack of strength to sustain the recent gains and recent recovery of 87.69 low, but unable to break above 93 and 93.50, 60 barrier zone that is required to open way for stronger recovery, while gold came again under increased pressure following a brief recovery from 1728 that was capped at 1753. If I recall on our yesterday's written analysis, I said that most likely scenario would be further extension lower as the pair fails to regain immediate barrier at 1755. That also marks a previous range floor and the 38.2% retracement, and they're looking most likely for a possible retest of 1728 as a part of the broader down move from a 1795 yearly peak, and they look for test of our initial target at 1700. Of course, more of this we're going to see in our technical part. This is just a brief outlook. As said, the European Eurozone summit is still a key event for today, with the calendar not very for today, but still having some important releases. As Japan, all industries activity for August has already been released, slightly below the forecast at 0.10 is the today's figure, compared to minus 0.6 of month of July, and Eurozone PPI, Germany PPI came at 0.3% as expected. From the Eurozone, still to see at 8 o'clock GMT is the current account for August. Widening of the surplus to 11.3 billion euros is forecasted for today, compared to July surplus of 9.7 billion euros, and at 8:30 GMT is the UK PSNB public sector net borrowing for September. Forecast shows the figure slightly below the previous release of August, that was 12.4 billion, expected to decline to 11.1 billion British pounds. Across the ocean, a few releases, Canada and the United States. Canadian inflation for September is expected to tick higher, monthly release to 0.3% compared to 0.2% of month of August. Core CPI also to forecast at 0.4% compared to 0.3% in August. And finally, existing home, these two are due at 12:30 GMT as shown in the calendar, and the existing home sales from United States due at 1400 are ending today's economic indicators releases. 4.73 million new units is forecasted for the month of September, below the August 4.82. Overall, a positive tone that is recently established on the release of U.S. indicators signals quite slow but still a steady improvement in the U.S. economy, with yesterday's the weekly jobless claims that surged higher again, and they went well above expectation, coming out at 388,000. Still seeing not much destruction in the current positive outlook, as average figures are showing slight and steady improvement in the jobs market, which is one of the most painful points in the current situation in the U.S. economy, giving a more positive tone into the overall picture, and the possible further improvement, and the possible emerge out of the current crisis. From technicals that we are going to take a look now, we will see the latest movements in the major currencies and the commodities, more detailed view what is going on and what to expect in the near future. Starting with the single currency, as we can see, it's still in the corrective consolidative mode of 131.38, following a failure to regain our initial upside target at 131.70, as a quite positive tone has been established after leaving a double bottom at 128 area, where the 200 days moving average contained the dips, and the break above 130.70, that was the 5th of October high, and a strong barrier, as well as a lift above 131.00, reached so far 131.38. Recall on yesterday's comments, I said that most likely further hesitation on approach to 131.70 barrier is quite likely to happen, and basically the single currency is now correcting, consolidating recent gains with the 130.60 base. This is also the previous high at 130.70, and approximately 23.6% retracement of the entire rally, still holding the downside, reinforced by 20 days exponential moving average. This morning we have seen some dips lower. 130.44 was the low, but quick recovery now brings again more hopes for a possible leaving a higher low at this zone for fresh attempt higher. From the indicators, the 4-hour ones are still in the positive territory, slightly aligned towards the downside, but still keep the overall positive tone, while yesterday's reversal of 131.38 brought the hourly indicators into the negative territory. Now they're starting to point higher, so it's early bullish signal for possible recovery and further strength. We need to see a gain of 131 as a minimum psychological barrier also in order to refocus 131.38 and probably for extension towards our initial target at 130.70. For now, as said, the gains have been contained at approximately 130 at the, let's say, 50 zone. More risky would be a further slide down to 130 zone, where we have the 38.2% retracement psychological support, as well as 55 days exponential moving average. And basically, if we see the extension below 130.00, that might signal further delay in near-term bulls and allow for deeper reversal to attract Fibonacci supports 121.70, 129.70 and 129.30, 50 and the 61.8% retracement respectively. That will definitely dampen the near-term bulls. For now, the structure is still holding its positive tone for possible reversal higher. Yesterday's rather quiet movements with slight descent of 131.38 were based on the investors awaiting more news from the Eurozone summit, as nothing very significant came, as whatever came already, it's already been mentioned and expected. As the hottest problem and the hottest point in the current situation is the Spain that hasn't been discussed into details, and still most likely the European Union, as Spain also awaiting the elections that are due on Saturday, and then they will proceed with the most likely request for the aid from European Union. So lack of any more significant and more spectacular, I would say, news has still keeps the euro within the parameters of the upper boundaries, and still sees potential for possible further extension higher. Of course, a break above minimum 131 is required, otherwise we might see additional downside pressure, as hourly structure, despite some positive initial positive signals, is still in the negative territory, and the probability of further slide is quite high at this point. And as said, the sterling, the top loser of yesterday's sharp fall, increased the risk aversion as the price dipped as low as 160.37, followed by a quick recovery that did not show much of recovery. 160.64 capped 10 days exponential moving average, and the fresh slide this morning dipped to 160.31, keeping of course still 160.20 and 160.00 intact, with the beginning of European session seeing some recovery. However, quite a negative tone that dominates on the lower time frames, as 4-hour indicators are now breaking below their midlines, but overextended the conditions on the hourly signal probably bounce higher. Still keep basically the downside vulnerable, and the test of 160.20 and 160.00 is still likely, unless we see the break above minimum, I would say 161, that is approximately 38.2%, and there are the 55 and 20 days moving averages. The risk, unless this level is regained, the risk is still seen more toward the downside, as a part of the larger downtrend from 163.08 peak of 21st of September 2012, with break below 160.00 as psychological support to open the key level at 159.74, 10th of October low, and to trigger a stronger corrective action of the larger uptrend from 152.67 to 163.08, with the between 23.6 and 38 0.2 as being retraced so far. Current bounce is still short of important 162, 162, 16 levels, break points actually, break of which is required to turn the focus towards the upper barriers. Otherwise, we still see risk towards the downside, especially following yesterday's sharp fall that keeps the upside for now intact, as the pair reached 160, 170 2 days ago, and then the sharp fall lower brought prices close to the initial downside supports at 160.20 and 160.00. Descending indicators on the on the daily chart, and the loss of initial bullish momentum again sees quite high risk of test of the downside levels with the 160 and 159.75 reinforced by 55 days moving average, and the lower Bollinger Band still sees more risk for test of this level. And the dollar yen, as said, made great progress after breaking above 79.00, and yesterday's close above this level sees more prospect for further extension higher, as the price cracked 79.21 and currently 79.29 79.39 200 days moving average, with the subsequent corrective easing being contained above important 79 support that is now acting as initial support, and is reinforced by ascending 55 days moving averages shown on the hourly chart. A positive tone despite quite extended conditions on the hourly chart, and the 4-hour indicators also being extended, and RSI already in the overbought territory. See, of course, some risk of a possible further consolidative corrective action before a fresh push higher, but overall positive tone keeps focus on the upside. Today's close above, I would say 79.40, which is 200 days moving average, would give more credibility to the current bulls, and definitely will turn focus towards next psychological barrier at 80.00, with the 79.65 previous high of 20th of August 2012 seen as intermediary barrier. On the downside, set 79.28 as initial support, and the more significant is 79 zone, a break of which might be signal further delay. 79.00, 78.90 is seen as a break point on the near-term action, and break below these levels would allow for some stronger corrective action of the latest rally. But overall bulls are still well in play, but we have to take into consideration that overextended conditions on the lower time frames are still keeping a possible corrective action in play, with as said 79, 78 and 90 seen as a good support, and ideally any dips should reverse at this level in order to keep the near-term bulls fully in play. Apologize. Dollar Swiss initial break above 79.50 resistance. That also marks 23.6% retracement of the down leg from 93.70 to 92.13. Has seen not much of the action as the price jumped to 92.60 so far, but overall positive tone established on the 1-hour chart, where the indicators broke above their midlines. Still sees potential for a stronger recovery and further retracement of the 93.70, 92.13 move. However, the overall picture is still very negative and very bearish, following a downtrend of 99.70, 24th of July peak, and especially in light of creating a double top pattern that was confirmed on loss of 92.37 support, with the 92.13 seen so far still off the psychological 92 support. As said, a more positive tone is seen on break above 92.50, but still regain of 92.83, which is the intraday low of 16th of October 2012, and the regain of 92, 90, 93, I would say at this point. This is approximately 30%, between 50 and 61.8% retracement. Also, psychological barrier is required at this point to avert immediate downside risk and allow for a stronger corrective action. Key barriers, of course, remain at levels above 93. At this point, 93.70 is the lower top of 15th of October, and the break here is to turn focus higher. Of course, initial signal will be given on possible crack of 93 barrier that will ease the current bear pressure and open way for test of above upside barriers 93.70 and 94.00, where is also 200 days moving average. Conversely, any reversal below these levels will signal a lower top and ideally extension up to 93 at or below 93, reversal at or below this level would signal a lower top and a possible extension of the broader downtrend that so far reached 92.13. And November crude oil, that reminder expires today, remains steady, entrenched within the narrow range of 90.65 and the 92.80 that was established 2 days ago. I think we can see it better on the hourly chart. Still sees no direction, and the lack of strength and momentum makes the near-term studies in a rather neutral mode. Positive was a recent dip yesterday, actually, that went down to 90.65 and then a quick recovery up to levels above 92.00, keeping still overall positive tone of recent lows at 87.69 and the 88.20 in play, but congestion at 93.50-60 zone is still evident, capped by 55 days moving average, and basically break above these levels and regain of 94.20 is required to improve the current structure and open way for stronger recovery. Basically, this will also confirm the higher low at 97.69 and the open way towards upper barriers 200 days moving average at 95.65. Conversely, loss of the initial support at 92.00 will again refocus downside with interim supports at 91.54, 91.34, and the important one yesterday's spike low at 90.65 that will come in focus on a break below 92.00 and then 91. We said 54, 91.34, and finally the yellow metal comes again under pressure following a failure of the corrective action from 1728 on approach to 38.2% retracement. A strong barrier reinforced by descending 55 days exponential moving average, and the main bear trend line capped the recovery at 1753, and now fresh slide reached so far 1733 en route to 1728 as the indicators on the 4-hour chart are now pointing lower again, and the well negative tone seen on the 4-hour chart as where all three moving averages are now above the price and maintaining the current slide. Most likely scenario would be revisit of 1728 and possible extension down towards our initial target low of 13th of September, as well as 38.2% retracement of 1590 to 1795 at 1717. Above this 1709 is the 55 days moving average, and finally the 1700 psychological support break, of which I would say at this point would be firm signal for a stronger corrective action of the larger uptrend and the latest upleg from 1590. On the upper side, to provide any relief, we need to see the break above trend line resistance and minimum 1753, while the regain of levels above 1770 is required to turn focus again towards the upper barriers at 1790 and 1795, which marks a fresh 2012 high. That was all from me for today. I do apologize if I was talking a bit fast, but we had some technical problem at the beginning and the whole session was delayed. It's your turn now. If you have any questions, please, you can submit them now. We do already have... Okay, request for Aussie dollar first. We're going to take a quick look. The positive tone established on a bounce of very strong support and range floor at approximately 101.50-60 zone has regained the broke above actually important 103 and 103.30 level. This is the one that marks 38.2% retracement and regained the 104 psychological resistance, 104.10 seen so far. Also cracked the 200 days moving average at 103.43, keeping the positive near-term tone in play. However, current easing is seen on the overextended conditions on the 4 and I guess 1 hour chart that are already pointing lower. Of course, the hourly indicators are acting much faster, and MACD is already in the negative territory with the 103.52, where is 55 days exponential moving average now holding the downside, attempting to build the base here. This is also close to 200 days moving average. This is currently at 103.43. At this point, ability to hold above this level, and today's close above minimum 200 days moving average as initial support would be quite supportive for the pair for a further extension higher, where we have 104.73. This is the peak of 28th of September, and of course we have 105 as a psychological barrier. As said, still positive tone, but overextended conditions are signaling some stronger corrective action from the Fibonacci levels that we should take a look on the latest uplift from 101.50 to 104.10. Approximately 23.6% has so far been retraced. Risk is seen on the break below the previous strong resistance at 103.30 and 103.00. That also marks 38.2% retracement and 55 days moving average. Ideally, reversal above 103 in case of any further extension higher. That is already signaled by quite weak hourly indicators. Would be seen as ideal for further extension higher. Otherwise, if we lose 103, then more risk is seen towards the downside. 102.80, 102.92 is the previous peak. So basically, break below 103, 102.90, we'll see increased risk towards the downside. Conversely, of course, bounce higher, and today's close above at least 200 days moving average will keep the near-term bulls in play, or near-term bulls of 101.50 in play for test of 104.73 and 105 respectively. And the second question was about dollar index. I'm going to take a quick look now. Ichimoku studies are firmly bearish, so there is no question about this. Daily structure also remains negative as the price descended from 84.10 24th of July peak, being holding below the 200 days moving average, with the death cross created on a crossover of 55 days over a 200 days moving average, keeping quite good pressure on the downside. The latest low at 78.60 was seen a month ago on 14th of September, with subsequent recovery being capped at 80.15, 80.20. So there is attempt of double top here that has already briefly been confirmed by loss of initial support at 79.10. However, quick recovery higher is still keeping possibility of further bounce, as our daily studies are, despite being in the negative territory, are pointing higher. From the lower time frames, 4 hour ones are pointing higher, still in the negative, still below their midlines. Initial resistance seen at 79.49, which is 55 days moving average, and I think we have the tentative bear trend line approximately at this point, exactly at 79.50. This is the one from 80.21 through 79.97, break of which is to open way for some stronger recovery from Fibonacci levels of the latest down leg, approximately between 38.2 and 50% so far retraced. I would say break above 79, 60, 70 that are 50 and 61.8% is to turn the near-term focus higher and prevent a pair of retesting 78.94 low of 2 days ago. Hourly structure is positive, quite toppish indicators, but still keeping the upside more in focus for stronger recovery. As said, they are at, I think, identical levels. 79. This is the lower time frame from 79.97 to 78.94, approximately 50% has already been retraced. If we see the break above 61.8 at 79.60 approximately, and the previous peak at 79.63, then more focus will be seen towards the upside. We are talking about the latest downleg from 79.97, so this is the one. Actually, we can make it this way on the 4-hour chart so we can see it a bit better, or even better this way. Still, if we don't see break above minimum 79.60, I would say again more risk will be seen towards the downside. Break above 79.60 is to turn focus towards 78. We need to see a regain of 78, and then pardon us, 70, 79, about 80, I do apologize, in order to focus the upper levels at 80, do apologize, at 80.21. This is the top of the recent recovery attempt, and break here is definitely to allow some stronger recovery of the broader downtrend from 84.10 down to 78.60. A break above 80.21, 80.37, 55 days moving average on the daily chart, and 80.70, 38.2%. Basically, a break above, I would say 81.00 is to confirm the recovery. Otherwise, any failure under 80.00 would be seen as a lower top and a fresh extension lower, as larger time frames indicators are still quite negative at this point, despite pointing higher. Confirmation will be seen on regain of minimum 80.21, otherwise more focus towards the downside. And finally, we have a request for silver. Approximately it's similar situation to gold, although silver already has fully retraced its recent, I do apologize, recovery from 32.53 as the price dipped to 32.50 so far, keeping more focus towards the downside, as a corrective attempt of 32.53 stalled at 33.27, slightly above 38.2% retracement, keeping more focus towards the downside as a part of the broader reversal and corrective action of 35.36 peak that is now approaching 32.36, 38.2% retracement. Also the low of 12th of September 2012, and basically I would say break below this level is to allow for some stronger recovery. Definitely the near-term tone is negative, as daily studies are already breaking below the midlines, and the 4-hour chart ones are pointing lower already in the negative territory, with the also hourlies being negative. So more focus towards the downside, and the targets as set 32.46 as the first one, 32.36, and then 32.00, 31.95 seen as the next target. To avert immediate downside risk, we need to see a gain of minimum 33.30 in order to prevent the silver price from further slide and provide temporary relief. More questions, or we will conclude session, because our Arabic webinar will start in a few minutes. It seems that we covered everything. Thank you very much for attending. I hope I managed to provide you with enough and adequate information for your trading decisions. Thank you for being with us. And we're back on Monday, which is going to be 20 something, 21st, 22nd, 23rd, I guess, of October 2012, pardon, 22nd of October 2012, with our standard time at 7 o'clock GMT. Wish you a nice Friday and, of course, nice and relaxing weekend. Good luck.